Let's bring in Hemang Jani, Senior VP at Sharekhan as well, who joins in with his fundamental take on the markets. Hemang, the outcome from the EU summit, or rather the comments coming in, as well as some clarity on GAR, is that enough for the markets to scale up higher, perhaps to 5,400 levels? Or like one of our technical commentators was just saying, that would take more from the government side by way of policy reforms, and only then can the market scale up higher?
Well, we believe that this development of EU summit has to be viewed in the context of the expectations. As we all know that the expectations were extremely low. Any positive outcome is taken very positively. Also the fact that we had an important expiry in the rollover side, particularly on the Nifty futures, the rollovers are much lower. And since we've seen that from the government front in the past, there were 2 to 3 occasions where expectations or hype was built up, but actual delivery was not much. So this time around, people are taking a little cautious stance. So we believe that since important level of 5,200 is crossed and expectations are low, there is a good probability that we will, take a base around 5,200 and move up to 5,350 and 5,400 eventually.
Hemang, wondering if you had a chance to go through the GAR guidelines in detail, and even though the market sentiment is pretty upbeat, but if you would look at the fine print, there isn't too much of a breather. At least that's what tax experts seem to be suggesting. Do you think once the market gets a better idea of what the fine print is, we could see a different kind of a reaction?
Well, yes, the GAR guidelines in the present form does not leave much of optimism. But if we have some kind of a category clarification about 2 or 3 things, like for example the fact that retrospective effect would be there or no, and whether there's going to be some kind of a threshold on the kind of taxable rate that we are looking at, then probably the market would take a more positive view of the development.
So what sectors are you recommending your clients to buy at the current juncture, Hemang?
Well, clearly some of the beaten down sectors are where there is a much more potential on the upside. So cap goods, then power and banking are some of the sectors that one could really look at. Also the fact that metal as a pack has remained quite subdued because of the global issues, and the overall outlook there is quite muted. So we believe that some of the metal names like Tata Steel, even Reliance Industries are some of the stocks where there is a scope for some more upside.
What about the banking pack, Hemang? Do you think there is more scope of an upside in stocks like an ICICI Bank, an SBI, HDFC Bank?
Yes, we do think that after the disappointment on the RBI policy meet front, we had seen some knee-jerk reaction, but overall we believe that given the fact that the slowdown is more pronounced, we would see some positive news flow on that front, either on the rate cut or CRR cut. And overall we believe that though the numbers may not be great, there is a great comfort on the valuation front for some of the PSU banking stocks as well. So we continue to be quite positive on that space.
Hemang, what about the power space? Because increasingly there seems to be trading activity built up as well. Power tariff hike in New Delhi as well, and now it seems that the cabinet note on the bailout package for discoms as well is ready to be implemented or ready to be released. Would you advise your investors to buy into any of the power names?
Yeah, we do think that we are taking small baby steps in terms of reforms by doing those little things on the electricity tariff hike. Also, we believe that over the next few days you might hear some more positive news flow on the duty on the power equipment space and a few more reforms. Even FSA part, which was actually not going anywhere, there is some agreement on 65% agreement. So we believe that once you see those steps being taken, this entire sector which was beaten down so badly could get some kind of a positive sentiment. So we believe that companies like BHEL, L&T, and even some of the finance companies in the power space like REC, PFC, IDFC would definitely have some positive rub-off of these developments.
Hemang, what about the OMC pack in general? Would you tell investors to avoid them in general, or do you think they could look at them?
Well, from a crude price fall play point of view, and the fact that we might see some positive reforms, though one cannot be that confident in the current environment that the reforms on the subsidy or diesel price hike front would materialize. But yes, there are some people who believe that you might eventually see some steps being taken on that front, and the fact that the crude price has already topped out. This space provides a good opportunity because company like BPCL has a huge assets even outside India apart from the oil assets that they have here. So we believe that yes, from a medium to long term perspective, some of these companies are looking very interesting.